Welcome traders to our midweek technical analysis video. So jumping straight into things here from where the market opened up. Obviously we spoke about this in our start of week technical analysis, but I will go over it real quick. So the market opened up here and as we knew, we ended up finishing last week at sort of this low. We saw sort of 6 hours before market close of bearish momentum after we saw a break and retest of this support area. As you can see, price continued to consolidate on the lower time frames in a downwards fashion until we got to that support level that was tested a couple times of around 4,058. As you can see, at about 7 o'clock, 7 p.m. GMT, we saw a big push down all the way down to that level of around 4,005. Price pushed up away from this level and we saw a break and retest pattern form where we saw price test as resistance on previous support. After then, we saw price test this same area once again with a little bit nicer price action. When I say nicer price action, I mean on the lower time frames, we had signs that price was going to reverse instead of this sort of big wick down and then big wick back up. As you can see, price came to originally test this point of resistance from this break and retest pattern of around 4,048. Price rejected off of this level on the lower time frames. We retraced slightly around 200 pips, and then from there, gold has been bullish. We originally broke past this resistance level, giving us the first indication of some bullish momentum. Price then pushed to our value area low that we established in our last post-week market review. We ended up testing this area as a resistance and price continued to push above it. You can see price push back down towards this level and we tested as somewhat of a support. We had a slight retracement testing on 4,058, the same area that we saw price held up at throughout this movement last week. But since that test, we have just seen continued bullish momentum with price creating higher highs and higher lows, higher highs and higher lows, with the most recent high at our value area high on the point of value area high that we established using our fixed range volume profile in our post-week market review. Price has rejected off of this level. However, it looks like the rest of this hour, we've got about 17 minutes left. We're going to expect price to pull itself back up from here. As you can see, we've seen an enormous bullish candlestick at 2 o'clock. So New York session open, and obviously we are currently at our second candlestick here. So we're just sort of looking for price to wick itself back down as we have seen, and then somewhat finish potentially or perhaps around here. So let's say 4,118. Obviously, if we see the candlestick stay the way it is right now, we'll accept it as a bearish engulfing. And obviously, the higher the time frame, the stronger the information. We are on the hourly time frame, so the information is relatively strong. So we can take that into an account, not base a trade off of it or not base our bias off of it, but we can definitely take that down and mark that in as a possible shorting or a possible bearish opportunity or bearish move. For the rest of the week then, it sort of depends on this next hourly candlestick. If we see price finish anywhere sort of around this area here, we will expect price to eventually break through this point of interest at around 4,130. If price then breaks that level, the next level will be that main level of 4,145, a level that I've spoken about in our post-week market review. So if you don't know what I'm talking about when I talk about this level, you will know if you check out our last video. And then that'll be sort of a potential resistance place. If price ends up breaking through that level, we're just going to be targeting our next point of interest all the way up until sort of the previous all-time highs, which was around here. So let me just go for a bearish scenario. So if we do see a bearish engulfing candlestick, so meaning that this candlestick will need to finish bigger than this previous candlestick, we'll then look sort of at the 4 o'clock open candlestick. These are GMT times, so British times. If you see 4 p.m. candlestick open up, we're going to accept that as our potential entry candlestick. If we see sort of half the volume of these two candlesticks reached, we'll expect price to wick back down and then sort of by about 5 o'clock, we'll see that retracement. If price does retrace, we're probably going to expect to see that value area low. Obviously these levels here, so we have our value area high, value point of control, and our value area low. Again, ranges and levels that we established in our previous video. If we see price pull up below this level and push away from this level, we're going to expect that value area low to be touched, which is around 4,070. If we see price pull away from this area, we're then going to be looking at 4,130, our value area high, to be broken. So we'll tap back in our post-week market review and see what actually happened. And yeah, but I think looking at overall price action and where price is actually pulled out of, I think a bullish continuation is more likely. But obviously, it depends. Sort of, it's a nice time to do this technical analysis. That's the reason I'm doing it now. It's a sort of nice little point to go off of. So within the next sort of 15 minutes or so, we'll see sort of our first little verdict, and be able to give a better bias at what is actually going to happen with gold for the rest of the week and the coming weeks. So yeah, that's going to be our midweek technical analysis. As always, I hope you've all enjoyed. Don't forget to like, comment, and subscribe, and I will catch you in the next one. Peace.